Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to Business Line's State of the Economy podcast on real estate. This is your host, Abhishek Law, and we have with us Mr. Amit Ramani, the Chairman and Managing Director of Office Space Solutions. Office Space Solutions, as we know, is India's leading and largest flexible workspace provider. And it made its name in history by being the first coworking company in the country to go public within, 9 years, in less than a decade. It raised around 599 crores during its IPO. So right now it's focusing on key markets like Bangalore, Pune, and tier 2 cities, while it's looking at a 30% revenue growth in FY25. Welcome, Mr. Ramani, to the podcast.
Thank you, Abhishek, for having me on the podcast.
So a quick question, obviously, is I would like to start with is what is the office market outlook like for this fiscal right now? FY24, we are already, I think, nearly 6 months down the line.
So, Abhishek, I think, clearly we are very optimistic about the overall industry. And I think it's on back of some of the, key metrics that I believe, position us very, very strongly. So as long as, you look at the overall economic conditions, the India stack continues to do well amongst the global economies. And as the India stack does well, that clearly translates into commercial real estate doing well. As businesses expand, they expand their requirements, both if you look at service sector today, with the three key pieces of the IT sector driving demand, which is our global capability centers, includes our India IT offshoring and the standard IT offshoring, which drove the last 20 years of economic growth in the country in the service sector. Today, as manufacturing grows, clearly that ancillary support areas, which is the office space, grows with them. Pharma is doing extremely well. So all of this translates into commercial real estate doing well, and as a result, the flex doing well. Today, we are sitting at almost about 65 million square feet of about 850 million square feet in flex. In the next couple of years, it will cross almost 100 million square feet, growing at a 20%, kind of CAGR year on year. So I think very, very bullish about the sector and the overall industry.
If I may just take out the flex part and ask a question. If I look at the pre-COVID period when flex was just starting off, the COVID, which gave it a boost, and post-COVID, which is the current phase, how has the segment performed in each of the three phases right now? And what is the outlook like?
So in that overall, ecosystem, when COVID hit, we were primarily all doing co-working, which basically meant that a large portion of the demand came from SMEs and mid-corporates and startups. The enterprises were not early adopters of co-working. When post-COVID, I think a few things changed. One, all businesses required flexibility. Uncertainty equals flexibility. People don't want to commit for a long term. People want that ability to scale up, scale down with some level of flexibility coming into the play. Second, when people did start coming back, the business leaders, the mandate to the real estate, leaders internally from the business leader was, I want the space yesterday. So speed became very, very critical in the overall equation. And then as distributed work kind of permeated within the companies, everybody understood that they just didn't need one location or two locations in a city. They would need maybe 10 locations, right? Because people wanted the choice to work closer to home. So all of this drove the enterprises to also jump in a big way. And as a result, the industry expanded exponentially. Pre-COVID, we were in March of 2020 sitting at about 25 million square feet. As I mentioned, right now we are touching almost 65 million plus square feet in this space. So I think the growth over the last 3 years has been very, very rapid. In terms of the overall outlook, we believe that the equation so we try to look at it in a few different lenses, right? So what are the kind of companies doing, at their different sizes? So what are the multinationals and the corporates and mid corporates and SMEs doing? And then what is that correlation to the cohort sizes of the seats itself, right? So under 100 seats, I believe that for any type of company, this is clearly the front and center option, which is flex being the clear front and center option. Between 100 and 300 seats, depending on the size and scale of the company, for SMEs and mid corporates, this is a slam dunk choice. For the large corporates between this cohort size, large corporates will take a call depending on, again, speed, flexibility, multiple location answers. And if they have more predictability, they might go the conventional way. Above 500 seats and more, I think the jury is out. Managed office, which became a big part of the co-working flex industry, I think above 500 seats, I think the jury is out because as certainty comes back into businesses, I think above 500 seats might see a bit of change. But clearly, I can tell you that today, co-working flex is part and parcel of every company's real estate solution in the country.
Just a little, maybe I should have asked the question earlier. I'm just taking the liberty of asking it now. When we started off with the concept of co-working, it was a very simple, straightforward definition of shared workspaces, while 2-3 different people from 3 companies or one company having 3 spaces on rent, take it up and go. Today, in today's world, is there a subcategorization in co-working? And if so, what are these? Is there some sort of different definition evolving, or is the space evolving? Can you just elaborate it a bit for the listeners or simplify it for the listeners?
Sure. So, Abhishek, I think there are, under this whole flex space industry, which is the overarching theme, there are 2 key subsets that come out. One is the standard co-working where all of the industry started. And in the standard co-working definition, it was where companies coexisted. So all scales of companies kind of coexisted. This would be, SMEs, mid corporates, freelancers, startups, and then corporates all coexist. So we run obviously at office, multiple of these locations. We have 185 plus locations. A large portion, I would say about 75% of these are set up as speculative centers, which means that I will not have a ready demand, but I will, after I've opened the center, I will curate the demand depending on, the location, etc. In each of these locations, there could be 10 to 30 different companies sitting. They could be taking 1 seat to, let's say, on an average of, let's say, 50 seats. But the largest customer could be 250 seats. The smallest customer could be 1 seat. That's the concept of co-working. Then the industry evolved post-COVID. When enterprises came in, they said, we do not want to coexist with a lot of different companies. So please curate an option which basically provides a dedicated space for us, which is designed to our specifications, which is built to our specifications, and managed to our specifications. So we call this whole arena as managed office, where a space is taken up specifically for a single client to be using that space for that certain duration. So these are the 2 key concepts that are there. In our business, 75% of our revenue comes from co-working, 25% comes from managed office.
An unpopular opinion, or let's say viewpoint, if I may take it up. If I look at global markets, the US is still, it's not slowing down, but it's still in a seesaw position, let's say, economy wise. So do you see any impact of that on the office leasing space in India? Ironically, yes, GCCs are investing and buying spaces in India, but taking up office spaces in India. But is there a follow-on threat there, or is there some sort of bubble that is building up?
So, Abhishek, I think I am not fully expert in the US economy, but I will take a couple of cues from US and then I'll correlate it back to India. So if you look at the US market, US is a very professionally commercialized market. And, the challenge that you see in the commercial real estate market in the US is that the end user stopped coming to office, right? I mean, if you look at US, many companies even today have not been able to bring workers back to the office. So if the worker is not coming back to the office, even after, let's say, a couple of years of stability, right? COVID ended somewhere in 22. If the worker is not coming back, then the companies have no option but to give up that space. And obviously that has having an impact on the overall commercial real estate market in the US. Now, coming to India, if you were to do similar comparison, we are today sitting at about 850 million square feet of total commercial real estate between grade A and B stock across tier 1 and tier 2 cities. Just New York City, the 6 boroughs of New York City, Manhattan, Brooklyn, Staten Island, Hoboken, etc., is 450 million square feet. So if you look at the population comparison, 380 million, population in the US, 1.44 billion in India. We are the most under commercialized market in the world. So I think in my personal view, India will not have any direct impact of the US commercial real estate market, which is certainly sitting at a bit of a bubble scenario. India will continue to have a growth trajectory when it comes to commercial real estate, and obviously Flex as a subset of that, because one, we are under commercialized. Second, the urbanization is happening very, very rapidly. In the next 10 odd years, 50% of all of almost India will operate out of the top 10 metro cities in India. Clearly, when somebody comes to a metro city, they are focused on, services, and a subset of that would be, services and, probably manufacturing. No agriculture is happening. So that service means growth in commercial real estate. So I personally believe that, we are not in a bubble in India. In fact, we are in a very strong bull market over the next 10 years in commercial, and obviously as a subset in Flex.
One light question on a very lighter vein. What is it that Indians love to come to office while that same person is in the US is not coming to office for the same company?
So, Abhishek, I think, you have to start from how we operate as a country, right? We, as a country, have a very strong social network that's built into our ecosystem. From the point you're born, you're living in a joint family, to very focus on, going to a school. A school has much larger population together, even a college in many ways. The cities are structured in a way where there is a lot of engagement that happens. I was in Mumbai recently. Every street corner you see the Ganesh Chaturthi celebrations going on. And that's a very, very strong social fabric of our country, to celebrate together, to live together, to participate in many things together. So I think that is part and parcel of the DNA of India and the beauty of India. Second piece of it is the homes in India are not capable of everybody operating out of the same ecosystem, right? So the reason initially we had everybody working from home, because children were at home, right? People could not, where would you leave your children if you have to go to work, right? Now, children are back to school. The husband and wife, obviously, even if they are working, they find no reason, because the homes are structured very, very differently. They're much smaller, etc. And the real honest truth I would tell you is that, in certain functions, working from home all the time is not possible, right? When you want to brainstorm, when you want to onboard new people. And in India has a very diverse, population of the kind of work that we do, kind of services that we do. So in India also, if you really look at it, the IT sector has been the slowest to adopt to return to office, right? The other sectors, if you look at BFSI, pharma, look at, consumer durables, all of that is 100% almost back to work, right? I think, and then obviously, because of these reasons, I think India is behaving very, very differently than the US.
The question is, during COVID and for some more some more months after COVID, there was a strong thought that tier 2 markets will finally get the real estate growth, with co-working spaces coming in, investing, and people moving back to cities. Is it moving back to the hometowns, actually? and working from there. Is it still happening? Do we still see a tier two growth happening in co-working or otherwise in the office market space?
So, Abhishek, I think tier two story is now getting well established. And I'll tell you that, today, if you were to look at the top 10 tier towns, right, basically places like Indore, Nagpur, Chandigarh, Bhubaneswar, Coimbatore, Guwahati, and so on and so forth, the level of infrastructure that you have in these cities is extremely, good. I mean, you go to a city like Bhubaneswar, the infrastructure today is built for 15 years ahead, right? I mean, there are no traffic jams that exist in Bhubaneswar. You have to go from, I mean, there is repair work today going on NH8 to come from Gurgaon to Delhi will take you anywhere between 1.5 to 2.5 hours, right? So I think the infrastructure in the larger tier one cities is challenging. I mean, it's a big challenge. So I think if you go to tier two cities, infrastructure is good. There is lifestyle opportunities, there's entertainment, and there are now opportunities, right? If you look at all ITS companies, you take these 10 cities, they all have a strong established base in these cities. You look at India facing IT, all of the companies, the startups or even the large corporates today have established their India facing IT in these tier two cities. You look at the opportunities of, the medical school, all of this is available in these cities. So my honest belief is that the roadblock of growth in tier two cities is not all of these basic things that make cities work, like infrastructure, entertainment, lifestyle opportunities, but it will be the lack of supply, because our developer friends community has not gone to tier two cities to build. And as a result, if I was to go to Nagpur today, right, in a city like Nagpur, the rental is higher than Navi Mumbai. And the reality is of supply and demand. And that problem statement will exist for the next, I would say, 2 to 3 years till people figure out that the demand is strong and the supply is lacking, and they start tracking the supply there. And that will then lead to much faster growth in tier two cities.
Again, on a lighter note, I traveled 2 hours between Noida and Delhi today, which is basically my travel time between Calcutta and Delhi. But again, see, you're referring to Bhubaneswar, right? Which I understand is a very planned city. It was one of the first smart cities in India, if I recall it right. Same with Ludhiana. Sorry, Chandigarh. Beyond that, which are the other markets that you foresee could see significant growth in the coming days? Tier two markets, or let's say tier three even, which could see growth in this category?
So I'll address tier two first, and then I'll come to tier three. On tier two markets, I strongly believe markets like Indore will do extremely well. Again, a host of reasons, great education system, government that is focused on, creating the right infrastructure, companies already well established and other companies following suit. People from Indore now believe that, living in Indore is an option. Earlier, people wanted to go to a tier one town for their growth and so on. So I think Indore, I firmly believe, will have a very strong future. I also believe a city like Jaipur. I mean, you travel from Delhi, barring the Gurgaon stretch, from Sona Road to, outskirts of Jaipur today can take you 2.5 hours. You can flat, be there. I think the connectivity with Vande Bharat trains is creating lots of unique opportunities across India, be it Delhi, Jaipur, or be it Bangalore, Mysore. So I believe, cities like Jaipur, Indore, in the north and, central belt, cities like Coimbatore, I strongly believe, Mysore. I also, believe cities like Vijayawada, cities like Vizag. These have lots of options, as I said earlier about Bhubaneswar. I think I strongly believe has a growth potential. Ahmedabad is doing extremely well. So I think these are some of the markets where I feel there are a lot of unique opportunities that exist. In terms of tier three cities, the challenge today, And Abhishek, if you really see, 25 years ago, you could operate out of, a residential facility. 5 people could create a, office out of it and, kind of go forward. Today, even for 5 people, you can't operate out of a non-commercial space, right? So in tier three cities, the challenge is that the regulations and the compliances are not enough in place to force people to get into commercial zones. And I believe that till that happens, you will always have this dichotomy of people wanting to work out of substandard spaces, homes, garages, sort of more gala spaces and so on. So tier three, believe still has some ways to go.
Right. One point you referred to during your discussion was rentals. Like you said that in Nagpur, rentals are on real term basis higher than what they are perhaps at Navi Mumbai. So, in this context, or taking this as the backdrop, what has been the rental movement in office markets, specifically co-working driven segments today? I mean, any numbers you want to share or any outlook on how it's going?
So, Abhishek, I think, commercial real estate in the last couple of years, including Flex as a subset of that, has had a bull run, right? As a result of that, obviously, in some of the key markets where occupancies are very strong, supply is limited, the rents have gone up. I mean, if you were to look at a place like BKC, BKC in Mumbai, you could get space at about 200, 210 bucks a square foot till about a year or so ago. Today, if you were to try and find something in that range, you will probably find nothing. It's all in 300, 350 rupees, has cropped up. Cities like Bangalore, I mean, if you were to go to Bangalore CBD, it's almost in the last 2 years, the rent has almost doubled because of the lack of supply. You go to places like Outer Ring Road in Bangalore, it's gone up by 30, 40%. You go to High Tech City, there has been about a 20% jump. You go to Pune, Viman Nagar, Kharari, some of these markets have had a 30, 40% jump. So I think overall, the commercial real estate market has grown. If you were to look at on an absolute basis across India, the average would be somewhere around 8, 9%, but specific micro markets have grown tremendously well. In case of co-working also, it's the same. We are a byproduct of the micro market rental that a customer is willing to pay. Every customer looks at the micro market rental and then does the math to between flex or conventional. We across the market obviously have seen levels come up. I mean, during COVID, obviously we had gone down by as much as 20%. We are now, I think, from the pre-COVID level, we are up between 20 to 25% on a blended basis. I think specific markets have behaved differently, but on a blended basis, that's the growth number.
So, but you're above COVID level rentals, right? When I say you're back at pre-COVID level rentals or higher than pre-COVID levels.
We are higher than pre-COVID levels. So we touched the pre-COVID levels, about, I think, 18 months back. And since then, we have grown by from the pre-COVID levels, we have grown by about 20, 25%.
And any outlook that you want to put out on this, on how the rentals are expected to move in the coming days?
Abhishek, specific markets will be outliers. I believe that there are certain markets which are going to be extremely hot, certain cities which are going to be hotter than the other cities. And those micro markets will see a significant jump. But you also got to see that a large portion of India's demand comes from IT services, for which real estate is a very key ingredient to be able to be competitive. So I think the commercial real estate developer community and the occupier community will have to strike a balance, because beyond a certain point, it does not become feasible for people to offshore their work to India or to be able to deliver some of these IT services. So I think markets will have anomalies, but I think broadly, the markets will continue to be in the sub-dollar kind of rental range. And I think that kind of tussle will continue for the next 6-12 months. After that, I think things should stabilize in most markets.
You say sub-dollar, you're referring to around in India money terms?
Yeah, in India money terms, so about roughly between 80 to $90, 90 rupees per square foot per month kind of rental.
Okay. Right. So that was perhaps my last question right now. And it was lovely talking to you. Once again, thank you for taking your time out and coming on the podcast and explaining this subject to us.
Abhishek, thank you so much for having us over, and lovely talking to you as well.
Same here, sir. Pleasure talking to you, sir. Thank you, sir.
Take care. Thank you.